Hi guys, a fresh week and what a start of this week. What was rising towards the end of the month and in particular also on Thursday last week is now been falling and falling and falling and falling. We talk about the silver market and silver is particularly interesting as we observe the greenback is starting to gear up some momentum, and that's particularly interesting as the market might kind of continue with the current slide in motivation. We had this slight pin bar candlestick pattern, which was basically getting overextended to the upside. But then on Friday, and in particular the last trading day for the month, caused a substantial change in market direction. And with that, the slide in market motivation might kind of really continue. Now we observe the market has been stalling out at the 50 moving average. But is this it? I might say not quite, because we might see the market moving slightly higher initially. Why that? Because simply traders want to buy at cheaper levels, but that might just not push the market again back to higher levels, at least in our market observational tone and what we expect the market to do. The turnaround story here, 120 back down to 70-ish, basically a 40% drawdown here might continue. And what we observe now everything is different. I mean, we've seen this a couple of times in the past, say 2 times, 3 times in the past, that silver was tremendously moving higher as if there would be no tomorrow. But now the same story seemingly is just starting to unfold. What moves and moved to the upside is starting to fall. And now I might say we could be at this level here where the market kind of starts to push higher again, to then see saturation in this market, right? So like slightly higher again to then see another break to the downside. The initial target, I might say, could be at this 50 US dollar level. It looks like that was seemingly a bit and a big resistance area in the past, and that could act as a support zone, at least if the market will start to break lower. Obviously, demand story is one thing, but economic sentiment and some weakening in the general economic activity is just simply what just causes the market as well to get negative headlines here. And that's what we can see not only in the NASDAQ, but also in the broader based S&P 500, for example. And as we see now, consumer sentiment in the US, consumer confidence in particular, seems to weaken. The economy might kind of get supported and further support by the US Federal Reserve, but that's not going to happen, at least not for now. Jerome Powell didn't talk much during the press conference last week, but basically he was just evading all questions, stating they will be data dependent. And that data might also come out this week. We got non-farm payrolls on Friday. We got an array of other economic data which might be interesting. But what we observe, and that's the one thing we see in the S&P 500 as well as the NASDAQ, we see a bit of a turnaround motivation here in this market. Yeah? So the NASDAQ looks saturated at higher levels. The DAX also looks like kind of giving some way. At least for now, it is at a technical support area. The recent breakout zone, right? So that area which had proven a strong resistance is now acting a bit of a support. However, it looks like the market might just fade to lower price levels, as in particular the strength of the dollar keeps continuing. So in general, we see not only that the silver market, but also equities are moving to the downside, and in particular as well, gold prices have started to kind of move lower. That's quite often what we observe in markets. Why is that happening? Basically, asset classes which had proven to be positively behaving, moving to the upside, are all the ones which are giving way as well. And gold is no exception. In fact, we've seen this in the past quite a lot. Last time, especially during the COVID times, when stock markets corrected, we've seen that the markets moved lower initially as well. Because what moves higher is now what traders or investors kind of liquidate in order to kind of free some funds to maybe purchase stocks or to secure their stock margin in need. And hence, obviously, we see that the gold price as well is moving kind of slightly lower. Plus, what we've seen gold's tremendous run from just where was it, 4,300 towards more than 5,600 US dollars in just a month is just what was kind of giving us a bit of a slight parabolic uptrend. That doesn't mean that the gold price is going to start weaken at least quite a fair bit, but we could see that the markets are being impacted as well by some dollar strength. And what if the data from the US comes in better, or what if the data comes in weaker, right? So better US data might help the US dollar to gear up some momentum. Weaker data might help and might cause during the next month or next meeting of the Federal Reserve to kind of have them cut rates, which would bring a market momentum basically higher, as the liquidity of the cheaper dollar might help. But on the other hand, what we have as well this week is the interest rate decision out of Australia. And we have a couple of important data points looming this week, right? So the RBA is expected to not cut rates, but raise rates somehow. The recent inflation data here out of Australia were slightly better, and stronger inflation, say higher rising prices, causing the Federal Reserve, not the Federal Reserve, the RBA in Australia to basically start increasing rates to offset that motivation. Whether this is going to help the Australian dollar might be in question, because the Australian dollar had basically recently started to depreciate. And we saw that this last week's candlestick pattern right at this technical resistance zone. We can see this here in the market, right? So the market has been trading at higher levels in this zone, but the recent higher price points might now give way again and could cause the markets facing some profit taking. That's what we see. And what we expect here now is an initial drawdown in the Australian dollar, which could push this market back to the downside. And that's the same in basically other currency pairs as well. We see the same in the euro. Strong pin bar candlestick right on top of this resistance area might cause the market to fade lower. The Australian dollar weakening, the euro weakening, and the pound might also start to depreciate further against the greenback in particular, as the market had not traded in this vicinity, this strong area. And that means that the market's resistance might actually even cause a bigger sell-off here, as the markets have one thing in common: the greenback's strength is seemingly ongoing and might push the market motivation to the downside. Another trade we have open is the dollar against the Japanese yen, and that's a short position, so technically the opposite. But this trade seems to kind of look quite well, at least for now. Well, we sold the market up here quite high, and we are in way profit now. And now this pin bar candlestick, alongside some potential strength in the greenback, might push this market back to the upside. However, this is a longer term trade, and the market might indeed start to appreciate slightly before it's going to potentially fade again even further. So we'll leave this trade open, because this one is not based on the daily or the weekly chart. Indeed, off the daily, we might say the market strengthens and we could kind of go into any long position here. But this trade is based on the long-term chart, and based on the monthly chart, this market kind of given us a strong and nice resistance area. We've seen this array of higher prices, which had quite always moved back to the downside, right? So here, not quite, but here we've seen the market fading, and now we see the same. And in particular, during the first couple of trading days in this fresh month of February, you might see the market kind of starting to appreciate, to then in maybe the second or third week to weaken again further. So our trade could be in perfect condition, basically starting to fade again back to lower levels if the market appreciates. As we said, on the daily or the weekly chart, we might see the market's weakness to kind of continue again. Again, we'll see medium term how the market goes. For now, at least, we observe that downside motivation is projected to continue in this currency pair. Same story also happens in the other trade we've on, which is another short in the dollar against the Canadian, the loonie. And that's another long-term trade as well. The market started to fade, be sold at higher levels. We are still a couple of hundred pips in profit so far. The market has now been starting to appreciate, slightly at least, but based on the monthly chart, the market is getting a bit stuck on top of this 50 moving average, which could be kind of quite interesting, and it could act as a support. However, the way a market is currently trading looks like rather we are in this position here right now. Similarly speaking, as the market kind of started here, it went slightly higher, always saw the support and was able to rise. However, then a break to the downside might happen. And that's what we saw here. A couple of times of a strong support area, and could be that the dollar is gearing up steam again against the Canadian dollar. But the general strength of the loonie of the Canadian dollar looks better and more solid than the strength of the US dollar. So we expect that this market is going to fade as well further if the market is able and will be able to kind of break the support zone. So let's stay tuned and focused and see how the market goes medium term as the further weakness in this market might continue. Another trade we have on, and that's one of the last ones for us to remain in. Not an easy pair, to be honest. We've burnt our hands a couple of times, but that's again a risk trading, basically managing of your risk. That's the euro against the British pound. This market looks cool on the shorter term time frame, however you call the daily chart, but the market looks good to fade even further. Off the daily chart, the market faded already. We sold just up here when the market started last week to rise somehow, and now we see that this market is going to look extremely cool because of the monthly chart, and we mentioned this quite a few times here. The market has seen a strong resistance area and is at least now, according to our expectation, fading towards the 50 moving average. Again, earlier on this week and this month, the market started slightly lower, but appreciates slightly. So that's what we like to see. Earlier in the week, slightly higher. Later in the week, maybe lower. Or early in the month, higher, and later in the month lower as well. So plenty of stuff to talk about. This is our short outlook for the week. That's the majority of our open positions. If you guys are keen to follow, let us know. fxstrategies.asia. We're always there to support and help you. Just drop me a message or send me a line if you have further insights, and just don't forget to subscribe to our channel and leave your comments under the video. Happy trading. Talk to you soon. Thanks for your insights. It's gonna be an interesting trading week, and with our open positions, we are well ahead of the game, at least for now.